Hello, welcome from Trend Signal for a review of the data and events the week beginning the 5th of August. Monday morning, markets in turmoil from overnight news regarding the Chinese renminbi. More about that in a second. Not directly Trump's fault, indirectly, yes, it is Trump's fault. The main news overnight, if we just flick to the Financial Times, you can see it there. The Chinese currency, that's the renminbi, has collapsed through the 7 level versus the dollar for the first time in 11 years as traders fret about the effect of trade tensions on the Chinese and Far East economies in general. And this is really sort of in delayed reaction, you could say, to the news overnight on Thursday night when Trump announced a surprise 10% additional tariff on $300 billion worth of Chinese imports into the United States. And that starts on the 1st of September. So the markets were pretty much set alight on Friday with significant falls, all global indices taking a big knock, reflecting the concerns, obviously, that there is pretty highly unlikely, almost impossible, there to be any short-term resolution to this US-China trade war. The effect of this Chinese currency slump was a knee-jerk reaction into safe haven assets overnight, Sunday night, Monday morning. Sovereign bonds, the usual story. Japanese yen attracted a lot of interest, and equities were absolutely crushed. The Nikkei ended 1.75% down. The CSI, the Chinese index, 1.91%. Hang Seng, 2.85%. That's also beset with domestic troubles in Hong Kong, with the first general strike called on Monday. The first, I say the first general strike, the first one for nearly 50 years. So it's a pretty rare event. And the mood enveloped European and US markets, as you can imagine, on Monday morning. The FTSE, an eye-watering fall of 2%, 2.1%. The DAX, 1.7%. I say that as I record this. Obviously, it's very fluid. The futures on US indices imply a fall of between 1.4 to 1.5% for the US markets when they open Monday afternoon. Other safe haven assets have also taken their cue. Gold, as you'd expect, up $12 on the back of the news, which is the highest level since May 2013. And all this comes on top of the not so well received news from the FOMC, the Federal Open Market Committee, the rate setting committee of the Federal Reserve at the US Central Bank, last Wednesday evening when they announced their cut of 0.25% in headline interest rates, the first cut since 2008. But then they were let down by Jerome Powell, the chairman of the Federal Reserve, who said in his press conference after the announcement that the rate move was a mid-cycle adjustment to policy rather than the start of anything more meaningful in terms of an easing cycle. And I think the markets were definitely disappointed by that. The markets had priced in, some people are expecting a 50 basis point cut last Wednesday, and we only got a quarter. And expectations for more cuts this year have been pared back somewhat following the less than pleasing announcement from Jay Powell. And that really set the tone for equities for Thursday and Friday last week. And the move overnight in the Far East, well, certainly the move overnight is Far East inspired, if you know what I mean, and leaves equities really under the cosh on two fronts now. Okay, let's have a look at data and events. So we are post the very busy schedule last week, and not surprisingly, it's a little bit quieter. The data and events are a little more sparse this week. We've already started with UK services PMI, just about holding above 50, came in at 51.4, so a full point better than expected. Which is encouraging news for now, although it has had no effect on the markets. You can imagine if it had been a poor number and dipped below 50, how perhaps it would be headline news, but not a whisper, a whimper from the media at all, as far as I can see. ISM non-manufacturing data, the same as our services. I don't know why they call it non-manufacturing. It is services data. 55.5 expected on Monday afternoon, 3 o'clock. A slight uptick there from last month. Tuesday, we have the Reserve Bank of Australia's monthly policy meeting. No change expected there. Rates kept on hold at 1%. In the US, we have It's interesting this. So again, it's only ascribed medium impact by Forex Factory. But James Bullard is going to be speaking about the economy and monetary policy at the National Economics Club in Washington on Tuesday evening. And this comes hot on the heels of the FOMC's meeting last week and this mid-cycle adjustment to policy comment. And I think it'd be interesting to see what comments come out of this. So there is a question and answer session that follows his speech. So we could be in for some interesting moves if he doesn't contradict it, but explains it in a little more detail. So that could stir equities and the US dollar up on Tuesday evening. Wednesday, following on from the RBA, we got the Reserve Bank of New Zealand's monthly policy meeting. They're also remaining unchanged. Well, we've been told unchanged, and there's a possibility they could be cut to 1.25% in some quarters. So expect on balance a 1.25 point set on interest rates are cut by 25 basis points. That's the expectation anyway, and that was signaled in the previous meetings from recollection. Thursday, we have the Chinese trade balance. Quite interesting to see how that's been affected by the US-China trade war. Not that bad, actually, looking at it. But it could hit the renminbi again, and that's if the Chinese authorities are happy for that to happen. But a weakening renminbi will offset the effects of the tariffs that have been imposed as the Chinese authorities attempt to protect that 7 level, but I think it suits them now to let it go through, and that's one of the reasons why it has, although there have been some quite a bit of collateral damage on the back of it. Friday, we have our prelim GDP data here in the UK. Let's just get the quarter on one. That's the one we're interested in. This is a backward-looking bit of data telling us what has happened in the second quarter. It's the first reading, one of 2 readings, and it's the value of the goods and services produced in the UK. We're expecting a flat reading. And all I can say is to any of these bits of data coming out now, they're very much Brexit clouded, aren't they? And anyway, on the prelim reading, apparently only 40% of the data is collected in this first relief. But anyway, it'll probably give a reasonably good account of where the UK is in the second quarter. US, the only sort of remaining bit of data that interests us is the core PPI. This is the producer price index, the one that excludes food component. It's like a leading indicator for future inflation, really. It's the cost of goods and services going into production, and it's sort of expected at plus 0.2, plus 0.3%, which won't worry the Fed, unless, of course, they would like to see a pickup in inflation, which they've often talked about. But there we go. That's it for the week. Thank you very much for listening. All the best.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.